Alright, sorry about that. So, this is a life of the contract high. So, what this is saying is that when we click on the bar chart to display a stock, and let's say that this stock is McDonald's. So this is McDonald's stock, and we clicked on it, and we chose to not get the 1 year, the 3 year, but the max. So we want this bar chart to display the max amount of time that McDonald's has had stock. That is a horrible max. So when we click on it, we get this, and I have that. We get this bar chart, and what it's showing us is that at one time McDonald's went up and down, up and down, up and down, and right now it's about to approach the life of the contract high of the stock. See, this point right here is the highest that the stock has ever been. Right now we see stock is starting to approach this line right here, and so we're wondering, is it going to break that plane and go up, or is it going to start going down? Because more often than not, it's hard to break that life of the contract high, because that's the highest basically anyone has ever, the people have voted that it could reach. So unless it's done something incredibly new to be valued at a higher point, it may be, it's likely it's not going to go above that. So let's say that it touches the line, and then at the end of the day it closes below this line right here, and you have the volume of trade. And sorry, this is a super horrible, I'm going to try and do better. This is the volume of trade, and you can see it on the bottom of most stock markets. You just click on, usually it's volume index, and let's say yesterday when it was at this point, right as it was about to touch the line, it was at 1 million. So this is 1 million, this is 2 million, and then the next day when it closed below, it increased its volume, trading volume of 2 million. That means yesterday 1 million people voted that the stock of McDonald's was worth the amount just below the line and about to touch it. But then the next day, as it started to approach the line, and it closed at the end of the day with 2 million trading. It means that basically 2 million people voted that it's not worth as much as the line, and that is most likely going to be followed by a downtrend, because people are going to see that, oh, it's not worth this much, and we need to devalue it because we overvalued it. Alright, so let's say instead that it's Monday and the stock market closes out on Monday right below this line, and let's say that this line is $10, and that's the highest it's ever been. So the next day it opens up, and it's Tuesday, and it closes above the line, and the same thing happened on Monday. 1 million people voted that it was worth $10, and then the next day when it closed out, they voted 2 million people, so even more people voted that it was worth $11. So that's a really good buy signal. It means that people looked at it right as it was about to approach that high and went, wow, this company is really good, we should value it as more. It's going to go up. As soon as it breaks that plane, it's most likely to continue an uptrend. Oh, that's life of the contract high.